Hey, this is Dennis. Welcome to this live stream where we get to analyze together the US30. So the US30 is popularly known as the Dow Jones. So we do together a walkthrough of the Dow Jones, and I get to show you what I usually look at when I'm trading. Right, so Open is MetaTrader 4. So this has always been my preferred tool. Why? For no specific reason. It's just that when I started trading, this was the tool that I started with. And I've got to learn it over the years, and I've gotten used to it, and it served me well. So right on MetaTrader 4, I switched to the 4-hour time frame of the chart. And then having done that, I zoom out. So why I'm zooming out is because I want to have a good understanding of the price and what price is doing overall. So the bigger picture. So before you get to take a trade, before you get to pick an entry, you need to understand the market structure. You need to understand where the market is going. So this is how you do it. You may have heard of something called a top-down analysis. So what a top-down analysis is an analysis of price or a higher time frame as you go lower. So in our case, we will start analyzing the market structure from the H4 time frame, then we can go to the H1 time frame. And then after that, we can decide what we want to do, or we can pick our entry on the 15-minute time frame. And then, make it a sniper entry using maybe a 5-minute time frame. So what a top-down analysis looks like is, so as I mentioned, this is H4, the 4-hour time frame. So we see that price has continuously been making higher highs, higher lows, higher highs, higher lows. So price comes here, makes a high, and then price comes, breaks this high, creating a new higher high. This makes this a higher low. Again, price comes here, breaks this, then invalidates that, broke that. So it looked like there was a change in the trend. But again, it came here, which meant that it broke this high, therefore invalidating this. So this is not a valid, this is not a valid lower high. This has actually been converted into a higher low, and then this is a higher high. Again, a higher low, a higher high. So for every higher high that is formed, it causes the last low to be a higher low. If a lower high is formed, then it automatically turns the previous high as into a lower high. So if we just expand this, so we were at this point saying that there's a break of structure. So this was the higher low, and then this is the higher high. And then if we can take the crosshair tool just to mark this out, we can see that there was a break of structure right here. So that means that this was the last higher low. And then again, with this being the higher high, we check to see whether it was broken, and yes, it was broken. This became the new higher high, and that made this the higher low. So since this has not been broken again so far, so that means the distance or the area between our higher low and our higher high, or more accurately, the distance between the higher high here and the higher low here, that becomes what we call our trading range. But more than it being our trading range, we've seen that we've seen a series of higher highs and higher lows. So it means that on H4, the price is quite bullish. On H1, likewise, we see the same. We are not seeing anything on H1 which would suggest to us that price is bearish. Temporarily here, the internal order flow was bearish, but that was swiftly corrected when price broke through this. You see this a lower high formed this lower low, but then this lower high was broken when price came through this, so which turned this into a higher low, at least according to the internal order flow. So what we are interested now is to find out whether price is back in line with the higher time frame trend or not. Yes, we can trade the internal order flow. However, it's not recommended. So yes, we can, if price shows us enough action, we can be able to trade a sell. However, it's not recommended. It's better for us to wait for price to give us a buy signal, and we will be able to buy. So as it currently is, price has given us a buy signal. So we are just waiting for the confirmation. So this was the higher low, this was the higher high. And then price decided to do a pullback, and it is possible that this could either be a pullback, right? Or it could be a reversal for price to go much lower. So the main determining factor is what price does from this point. Because according to the position of the price, so price came to the 50% point. So why the 50% point is important is that if one wants to buy, it's important that you buy when price goes at least beyond the 50% point in the trading range. So from here to here, if we were to look at 50% of that, so that is here. So once price got here, we want to see price having pulled back to at least 50%. And yes, price pulled into the 50%. So that means that price was in a discounted price range. Okay, so as it is, price has come and has broken this point, as I mentioned, and what we are waiting for is price to do a reversal into this area, or a pullback into this area for a continuation long. Even better is if we get a confirmation where price takes out this external order flow high, because if it comes up here and takes out this high, then the next thing we're going to be waiting for is for it to just do a pullback here. And then once it takes a pullback, we can take the trade back up. And something interesting to note is that the Dow Jones Industrial Average is currently forming record highs. The index has never been this high, and if at all price breaks, takes out the last higher high of the external order flow and does a pullback, then that will present us with a very, very, very good trade. And we'll be looking to trade it higher up. However, as it stands, price has not shown us enough for us to have an entry. However, we have a directional bias. we have a directional bias, we'll be looking to buy. So we're just waiting for price to move sufficiently. And we know as well today, the Fed will be making an announcement. It's expected that today, which is the 17th of September 2025, that the Fed will announce a rate cut. And we know when the Fed announces a rate cut, then there'll be crazy movement. And especially, we expect there to be crazy movement when it comes to the stock market, because a lot of monies will be moving away from the US bond market to the US stock market. So it is possible that that announcement will make the Dow Jones industrial average will send it to new highs. So I mean, at this point, let's wait and see. It's possible that this high might be taken out later today when the Fed finally makes that announcement, and then tomorrow we can expect to see that pullback, and then from there, we expect price to really, go all the way up. So that's our analysis for now. I think the call is for us to remain patient. A patient trader is a profitable trader. Remember, anytime you're not making losses, you're making money. Money that you've not lost is as good as money that's been made. And there'll always be new opportunities which are formed. So thank you very much. I wish you success in your trading.